In this presentation, we will discuss professional conduct as it relates to CPA firms, public accounting firms engaged in attestation engagements. We're going to start off by listing the professional standards. Note that as we go through the professional standards, you want to think of them in kind of two different ways. One is the overlying principles, the basic ethics behind the professional standards, why they're put into place, and then knowing what in general the laws are, the general guidance of the laws, so that you can apply them as you're working through the system related to audit engagement, related to CPA firms, public accounting firms. We also need to know the hierarchy of the system so that when we come into a questionable part, we can go to the regulations, we can go to the hierarchy of professional standards and get some guidance as to what we should do in a particular type of situation. As we consider these principles, note, of course, we're thinking about ethics within a profession. Any profession needs some type of ethical setting because the ethics is what's going to drive what is given here in terms of an opinion. If an opinion is given, there needs to be some kind of ethical standard by the person giving the opinion. The ethical standard is given in part not just by the character of the person, but by the profession that is in place, and therefore professional standards are going to need to be put in place and regulate. So as we do that, note that the professional standards you want to know the purpose of it, which is probably more interesting to most people, but then we also need to know the regulations, the structure of them, so we know where to go with the guidance and we know how the regulatory system is going to be set up within the professional standards. It can be a little bit boring, at least to me, to just kind of look at the professional standards as kind of like a law hierarchy of where you go to kind of figure out the answers. It's more interesting to me to kind of think about the why they're put together. And so as you go through the hierarchy of standards, just like you go through any law, tax law, or anything else, it's more interesting to me to think what is the purpose of the law that's going to be put into place. And you want to do that, of course, with professional standards, because professional ethical standards and these types of things, because they're really put in place as kind of guidelines, because there's no way that you can get to any specific all areas where you might have a kind of an ethical type of issue. So you really want to know the principles behind it, as well as the specific type of professional standards and regulations. So we're going to break out the professional standards in two groups. One is for private companies, one is for public company audits. So if we're auditing a private company, then we have the standards to the left. If we're auditing a public company, we have the standards to the right. Now, it might be better to think about this actually as basically the items to the left are the things that typically grew up first. These are the standards that basically grew up first. And then more stringent standards basically were put into place in terms of public companies. That's basically how these types of things grew up in the settings, in the professional settings. So you can think about the private company standards as, in essence, applicable to all audit processes, and then the public company audit standards being those things that were added to it when we're thinking about the public company audits, auditing companies that are publicly traded. So private company includes the auditing standards, ASB, the AICPA, GAS, Generally Accepted Accounting Standards, and the Standards of Professional Conduct, the AICPA Code of Professional Conduct. Then we have the public company audit items, and these are going to be over and above, in essence, the private company information. Auditing standards from the PCAOB and the Standards of Professional Conduct. We have the PCAOB Code of Professional Conduct, the SEC More Stringent Independence Rules for Public Company Audits. So we got the more stringent rules there, and the ISB, a cooperative effort between the AICPA and the SEC. The AICPA Code of Professional Conduct can be thought of in this type of hierarchical fashion. We have the principles and professional conduct. We have the principles of professional conduct, the rules of conduct, and then the interpretations of the rules of conduct by the Professional Ethics Executive Committee, the PEEC. So how we want to think about these professional rules then is we want to understand the principles, and that's really a key component, because a lot of times when we think of the law or types of laws, we figure, hey, we should be able to go to the law and see exactly our circumstance within the law, and that should give us, and if it's not there or something like that, then it's not covered, and we can do whatever we want probably, or something like that. It's not really the case on how this is structured. The structure is basically saying, hey, you should be following the principles of professional conduct, even if there's not something specific in, say, the rules here that address a particular situation. So this is the broad principles that we want to keep in mind. And then we have the rules, which are going to be more specific. And of course, those are the items which the law can kind of see, right? We could see those items within the rules. And then we have those types of things that are going to be interpretations of the rules. And these are kind of things where you can think of there's been questions a lot of times, and there's going to be some guidance given on these interpretations. They're not the rules. They're not as stringent or as strong as the rules, but they're going to be interpretations on those rules. So you can think of it something like this. We have the principles of professional conduct. That's the guiding principles that should be guiding, our behavior. They're not enforceable because they're not specific. So they're going to be the guiding principles that are kind of expected within the profession. These are the ideal attitudes and behaviors. So we want to get a sense of those. We want to have an understanding of those in theory. And then we have the rules of conduct. This is specifically enforceable because now we're talking about rules, which in the legal system, you can compare closer to just like the laws. And so if there's specific rules, specific laws, those are enforceable, minimally acceptable standards. These are the minimally acceptable standards. And then we have the interpretations of rules of conduct. So these are going to be things that are kind of, types of things that might be outside of the norm possibly, but they're specific interpretations of what those rules mean. So they're not the law. You could think of it as a comparison to the law. They're not exactly the law themselves, but there's specific guidance within the profession regarding those laws in specific types of situations that carry weight, carry authority. So they're not specifically enforceable, but departures should be justified. So you should be, if you have a situation here that's covered by the interpretation of the rules of conduct, we should be going by that interpretation unless we can basically give some kind of justification as to why they were not followed. Detailed interpretations and answers to questions about rules of conduct. So you can see up here, of course, when we think of the principles, it's going to be more general. We're up here in the clouds saying, hey, these are the things that should be guiding your behavior. These are kind of like the ethics or the morals of these are the things that should be guiding your behavior. Then we have the specific rules, or the rules that are going to be more specific because these are the actual rules. And then we have the interpretations, which are actually more specific because those are going to be answers to specific type of situations. And therefore, although they don't carry the weight of the rules, they're more specific given the fact that they could be thought of as answers to certain types of situations. All right, so now let's think about what the principles of professional conduct are. This is the top tier, the highest level. Responsibilities. In carrying out the responsibilities as professionals, members need to exercise sensitive, professional, and moral judgment in all their activities. So notice that's kind of like a general type of principle. There's not something exactly specific there, but it's a guiding kind of principle. Then we have the public interest. Members should accept the obligation to act in a way that will serve the public interest, honor the public trust, and demonstrate a commitment to professionalism. So notice, of course, as the public accounting firms, whenever we think about that, trust is going to be one of the major things because, again, the whole point is the opinion. We're giving up an opinion, and therefore we have to, and the principal people that need that opinion, oftentimes, especially when we have a public company that we're auditing, are often investors or the public, and therefore the conduct that is given in terms of just general conduct should be such that the public will have trust basically in the conduct. So again, general type of principle, you can see that as an overarching principle. Integrity. To maintain and broaden public confidence, members should perform all professional responsibilities with the highest sense of integrity. Again, this is a general overarching principle for the profession. Objectivity and independence. A member should maintain objectivity and be free of conflicts of interest in discharging professional responsibilities. A member in public practice should be independent in fact and appearance when providing auditing and other attestation services. So notice within objectivity and independence, we have these rules of being independent in both fact and appearance. And this is really important. It's applicable not just to basically audits, it's applicable elsewhere as well. I mean, if you want to basically have an opinion on something, you might say, hey, my judgment is good. I have good judgment. I judge the facts fairly. But if it appears that you're not independent, then you're still going to have a problem, even though you may come to the conclusion, as you think about it at least, in an independent fashion. So in the case of an audit, of course, that would be something like if we're auditing a company where the auditor has set up the internal controls, acts basically almost as a manager or a controller, a management position within the organization, then the auditor's kind of auditing their own work in a sense. So they may go through all the procedures of a standard audit, but they're auditing their own work. Or if the auditor is auditing a company where they have their spouse possibly working in a senior position, then the auditor may do a really good job and say, hey, I did a good job. I didn't do anything different given that situation, but it doesn't look like there's independence there, even though there may be independence in the way the work was done. And therefore, appearance is going to be important within the concept of independence. Due care. A member should observe the profession's technical and ethical standards, strive continually to improve competence and the quality of service, and discharge professional responsibilities to the best of the member's abilities. So we want to have due care. We have the responsibility of due care to go and complete the audit properly. Scope and nature of services. A member in public practice should observe the principles of the Code of Professional Conduct in determining the scope and nature of services to be provided. So what type of services are we going to provide? Note that as we go through this, we'll see that there's going to be something when we have an attestation agreement, when we do audits for someone, for example, then we can't do some other work that we might otherwise do, and some work that would be naturally appropriate that you would think. Things like designing the companies and implementing possibly the internal controls or something like that is a natural type of thing that you would think. If I audited the company, then you would think that it would be natural for me. I know I'm an auditor. I know what a system should do to be set up. I should put in the internal controls and set them up for the company. That would be natural to be hired as a contractor in that format. However, if you then audit the firm, then you're auditing, in essence, your own internal controls. So that kind of has a conflict of interest. So we have to consider what kind of things we can do, services we can do with relation to our clients. So then we have the AICPA rules of conduct. So now we're from the principles to the rules. Integrity and objectivity. In the performance of any professional service, a member shall maintain objectivity and integrity, shall be free of conflicts of interest, and shall not knowingly misrepresent facts or subordinate his or her judgment to others. So notice we're getting more specific here in what we're going to do. We can't knowingly misrepresent facts. We can't subordinate the opinion to others as an auditor. Of course, we have to say, hey, if this is not in compliance, then it is what it is, and we have to give our opinion on that. Independence. A member in public practice shall be independent in the performance of professional services as required by standards promulgated by bodies designated by council. So then those, of course, are going to be more specific. Notice now we're not just saying, hey, you need to be independent in fact and appearance, but you have to be independent in accordance with the bodies designated by council, required by standards promulgated. So there's going to be more specific, of course, standards now that we're at the rules level here. And then we have the general standards. A member shall comply with the following and with any interpretations thereof by bodies designated by council: professional competence, due professional care, planning and supervision, sufficient relevant data. And then we have the compliance with standards. A member who performs auditing, review, compilation, management consulting, tax, or other professional services shall comply with standards promulgated by bodies designated by council. Then we have the accounting principles. A member shall not, 1, express an opinion that the financial statements or other financial data of any entity are presented in conformity with generally accepted accounting principles, or 2, state that he or she is not aware of any material modifications that should be made in order for them to be in conformity with generally accepted accounting principles if such statements or data contain any departure from an accounting principle that has a material effect. So of course that's basically getting right to the opinion, right? Where you can't give an opinion that things are good if that's not the case. We're giving an opinion. If you give an opinion, the financial statements are presented fairly and they're not, obviously would be a direct not a violation of the rules of conduct. Next, we have acts discreditable. A member shall not commit an act discreditable to the profession. Next, we have contingent fees. A member in public practice shall not, 1, perform for a contingent fee any professional services for a client for whom the member or the member's firm performs an audit or review of the financial statements, or 2, prepare and or amend tax return or claim for tax refund for a contingent fee for any client. So notice that contingencies are going to be an issue. So you want to be, careful of the idea of the concept of a contingent fee. So for example, you can't have a fee that's going to be contingent on, say, the opinion of the audit. In other words, you can't say, hey, we'll have an audit for you typically and say, hey, we're only going to charge you if we have, a positive opinion, or say you have a contingent fee on a tax return on whether or not or how much the refund will be, and the fee being contingent on that. You can see how that would cause pressure within the audit. If your fee is going to be contingent on your position that you end up with, and you're trying to audit something to give an opinion, that would be more pressure for the auditor to have a favorable opinion, which it would make the audit process less reliable. So you don't want to have a contingent fee with that. Same with the tax preparation, in essence. I mean, if your fee is going to be contingent on the refund that's going to be received, it could lead towards bad practices in terms of looking for a refund that might not be there, or taking steps that might be more aggressive than you would otherwise do. Next, we have form of organization and name. A member may practice public accounting only in a form of organization permitted by law or regulations whose characteristics conform with resolutions and counsel. A member shall not practice public accounting under a firm name that is misleading. So this is kind of a bigger deal than you might think. Obviously, when we set up the CPA firm, you want to make sure that the firm name isn't something that's going to be misleading. Most CPA firms are pretty straightforward with, in essence, the names of the people that are going to be involved as CPAs within the firm. So you want to make sure that everything is straightforward in terms of the naming of the organization if you're doing public accounting. Names of one or more past owners may be included in the firm name of a successor organization. So they're basically saying, hey, if there's a past owner, it's kind of traditional for a past owner to want to have their name there, possibly as kind of a legacy type of thing. And they're saying, so if it was the name of a past owner, that's not something that's going to be misleading in that case. A firm may not designate itself as members of the American Institute of Certified Public Accountants unless all of its CPA owners are members of the institute. So you can't claim that you're going to be members of the American Institute of Certified Public Accountants unless all of the CPAs that are involved that are the owners and the members are members of it. Next, we have integrity and objectivity. What is that? In the performance of any professional service, a member shall maintain objectivity and integrity, shall be free of conflicts of interest, and shall not knowingly misrepresent facts or subordinate his or her judgment to others. Next, the concept of independence. A member in public practice shall be independent in the performance of professional services as required by standards promulgated by bodies designated by council. This will, of course, be important for attestation type engagements. Independence is going to be very important for audits, important for reviews. It's going to be important for other type of attest engagements, attest services. So if we're giving our opinion on something, and you can just see the logic of that, of course. If we're giving our opinion on something and we don't have independence, then that's going to cloud our opinion. So it's going to cloud the value of the thing that we're giving. So independence, of course, big deal when the service we're providing is independence on something like, say, the financial statements or some other area. Covered members must be independent. So what is a covered member? So covered members, someone on the attest engagement team. So if you have an attest engagement, such as an audit, it's going to be someone that's going to be on the team. So when we are considering, what about this independence issue? What are covered members with regards to it? It's got to be someone that's going to be on the audit team, someone of a position to influence the attest engagement. So if it's someone that has influence over what the attest engagement is, covered member. A partner equivalent, or manager who provides more than 10 hours of non-attest services to the attest client within the fiscal year. So now, of course, we're talking about the higher level individuals within the organization. Once more, a partner, partner equivalent, or manager. Of course, the partners are typically the highest people within the accounting firms, or manager who provides more than 10 hours of non-attest. So these are non-attest services to the attest client within any fiscal year. Then we have partner or partner equivalent in the office in which the lead attest engagement partner or partner equivalent primarily practices in connection with the attest engagement. One more time, a partner or partner equivalent in the office in which the lead attest engagement partner or partner equivalent primarily practices in connection with the attest engagement. The firm itself, including the firm's employee benefit plan. And finally, an entity whose operating, financial, and accounting policies can be controlled by any of the individuals or entities described above, or by two or more such individuals or entities if they act together. Now we'll consider the prohibited financial relationships. So we want to think about the financial relationships, prohibited financial relationships that would compromise independence. We have the direct financial relationship, financial interest that is owned directly by an individual or entity or is under the control of an individual or entity. So again, one way that someone could not be independent, of course, is to have a direct financial interest that is, especially if it's going to be material to the individual that has it, that's involved in the audit engagement. Material indirect could also cause a problem if something was material and indirect, can result if a covered member has financial interest in an entity that is associated with an attest engagement. For example, an investment in a mutual fund that owns the entity's stocks. So one of the ways to kind of think about this is generally if you have a covered member, someone that's going to be involved in the audit engagement, and they own stocks directly in the company that they're auditing, especially if it's at all significant to them, that's a direct interest that the auditor that's auditing the firm has in the well-being of that firm, given the fact that they are directly invested in the organization. So you can think of that as could be a problem, of course, with independence. But what about the fact that a lot of times these days you've got these mutual funds? So it could be the case that you put money into a mutual fund, and if you're investing in large mutual funds, if you're auditing a big company, it may just be part of the mutual fund. So then you got this indirect type, you call that kind of an indirect interest. What if I have a mutual fund? I'm not even sure what is all involved in the mutual fund because it's a grouping of a lot of funds. It might be just an index fund that has information in it. Well, then we're talking about a material indirect. So if you're thinking about a mutual fund, if that amount there is going to be material to the individual, then it would be a material indirect item. If it's not material and it's indirect, then you may be okay with regards to independence. So that's the way I would basically think about these two things, of course. If you have a direct financial interest, covered member in the organization that you are auditing, probably that's a problem. If you have a material indirect interest, that could be a problem as well. If you have just a mutual fund that has some investments in the organization as an immaterial indirect, then that may not be a problem with regard to independence.